Welcome everyone. So good to have you with us live this evening. I know we might have some guests tuning in with us as well. Also a big welcome to those of you who have joined our team over the last few days, and those of you that have checked out our website, jumped in, opted in, and are starting to work through that free course that is there for you. Really exciting times for us launching TrendForce in this past week. And tonight is, well, I'm going to say our usual team night of training, but it's not. We're normally doing it on Tuesday night, but Dad's off to Australia tomorrow to visit some family, so we're doing it tonight instead. We were doing this last night too. We were recording some content together, which is coming soon. But for now, guys, tonight is all about support and resistance. And for most people, they've been trading for a while. Very common things. But here's something that you probably haven't heard before. Maybe you have. But I once heard one of my mentors say that every single line on a chart is support or resistance. And so Dad obviously understands the intricate details of how we are trading with TrendForce and how to best use support and resistance to our advantage. And my goodness, has he got something exciting to show us at the end of this session. So make sure you stick around for that. Otherwise, I am going to transition over and get Dad on here so we can rip into the rest of the evening. So Dad, where are you? AKA Tim Stevenson. There we go. Found you, pinned you, gotcha. All right, well, deja vu, 2 nights in a row for us, but everyone else, so good to have you with us live. And as always, Dad, thanks for preparing and being here for the whole squad. And let's rip into it. Over to you.
All right. Thanks, Ty. So again, warm welcome to everyone and a few new faces too. And again, as Ty said, for those who just joined our team, our community, just want to really extend a welcome to you and wish you all the best for your trading journey. So tonight is all about support and resistance. So this is a huge part of trading. No matter what strategy or indicator people use, you'll never be successful unless you understand how support and resistance works. And so in terms of the big picture, for those who know our strategy well, we have 3 simple rules. TAS for TAS, T is for the trend zone, A is for the angle of the SMA 21, then S is for space. And that is where support and resistance becomes huge, because when you get a signal, is there enough space for price to reach at least TP1? That's what we look for. I mean, hopefully our trades will go to TP3 and beyond. But generally, if there's any line of support or resistance in the way, you're not likely to reach TP1. And so we need to understand exactly how price action works, where price is likely to pivot and reverse and go the other way. So I'm going to turn on my screen, so I'll be ready to share here. And there we go. We're going to look at the NAS tonight. So I'm going to share my screen. There we go. And I'm going to put some of your beautiful faces on my top monitor. And we're going to fire away. So I'm looking forward to tonight. So here we go. So we're just looking at the NAS. And we're going to just go methodically through. I just want to see if I can move these faces somewhere else. It's funny, they sometimes go horizontal when I want them vertical. That doesn't matter. We can work around that. So, and as Ty said, there'll be a bit of surprise at the end, something I've been working at. So here we're looking at the NASDAQ on the 1-minute chart. And I'm going to look at 8 levels. There are another 2, but not as big as the 8. So there are basically 8 levels of potential support and resistance where price can pivot and go the other way. So we're going to start with the big picture first. So this is something we did a couple of weeks ago. I'm going to turn on my 8-minute chart. So this is the 8-minute chart on the NASDAQ, and I'm going to turn off the indicator, and you will see we've got these lines. Now, for those who just joined us tonight, you may not understand fully what's happening here, but we encourage people. Let me just show you quickly. This is, we go to a 4-hour chart to do our long-term, high time frame planning. So it looks like a bit of a mess, but looking at possible trend lines everywhere. Plus, we put key levels in where prices reach the key high. We draw lines. Also, if there's a key low, we draw in lines. Then plus, we also do something called the Fibonacci retracement. So look, it may seem a bit complicated if you're new, but we did a whole lesson. This will be up on our channel, the YouTube there. So when you look at the 4-hour, it looks like a spider's web. But if we go back to the 8-minute, you will see that not many of these lines will appear on the chart. So computer is just busy getting it back to the 8 minutes. So if we look at the 8-minute without the indicator off, we can see how these key levels are respected. And so at the big picture, we look at Fibonacci levels, so 236, the 382. You can see how price respects these levels. Here you can see, no, it hit this level there, came down to another Fibonacci level, 382, tried to break above Again, the 236 moved up. So if you just scroll back, we're not going to spend too long because we've done a whole session, but we can see how price constantly respects the levels we've drawn. So yeah, it pivots off a zero level on a Fibonacci, goes all the way up. And here's three things that caused a massive pivot. Price flew up, and look, there was a trend line there, plus a previous high. So three things made strong resistance. Whenever you get like a cluster of resistance levels, price will radically reverse the other way. So, I mean, this was a huge move down. So from the peak, all the way down, oops, let me just get my measurement working, from the peak all the way down to that trough. I mean, that was like, over 300 pips. So look for clusters. But again, if you just look back, you can see again our price constantly respects the levels that we draw. So here it's down to the 0.5. It also rejects a previous high we put in. That line, you can see to the millimeter, rejects a trend line. And so we encourage people, have a chart, on a 4 hour, or at least, on a 1 hour or less, and then reduce it to an 8 minutes. And you will see exactly how price respects those levels. So I wouldn't trade without those key levels put in. And so I think today there was a massive drop. Now we'll look at that on the down maybe later. Let's just see. Now here we go. Look at this. This was the open today, this morning. We can see how price hit the 786 over here to the millimeter. These were lines I drew in a long time back. Price respected that level and then went up. So we need to keep an eye on the high time frames, for support and resistance. So that was my first point. Then secondly, let's just go back to the 1 minute here. We're going to fly through these tonight. The indicator also automatically puts in support and resistance zones. So we can see over here, there's a support zone. And the way they are calculated is that the software looks for a pivot low, and then it makes this zone. We call it either a support zone or demand zone. And it plots it between with the candle closed and the lowest for support zone. And so, although this is not a big one, we're a bit rangy. So when we get these pivot lows, this is a pivot low, we can see that sellers try to push price lower down, but the buyers stopped it over there. That means there are buyers in the zone. And likewise, we also find resistance zones. Now, this previously would have been red. So this would have been a resistance zone or supply zone. And so we can see buyers try to push price up, sellers try to push it down. It's not a big one, and that then creates the zone that can prove to be support later. And so you will see when price breaks through one of these zones, so this would have been red for resistance zone or supply zone. When it breaks through, we can see a lightning bolt is plotted. Once price breaks above a zone, a lightning bolt is plotted. Likewise, if price did break below this support zone or demand zone, then also a lightning bolt will be plotted. And I take a lot of trades based on these lightning bolts when price breaks. So often I will wait to see if price breaks, then I will enter. So very often price can reverse. So in this case, this zone was red. I mean, this price could have come up here, pivoted off, and gone straight down again. And so we have to be careful about entering trades just below a supply zone or resistance zone, or just above, so just below one of these zones, or if we're taking a sell, just above a support zone or demand zone. So we have to keep our eyes on those all the time. And so sometimes you see huge ones plotted. I think there was one, you can see this zone here on the 3 minute. Well, let's see if the 8 minutes broken through. Yep, that's broken through. If we just blow up the 3 minute, we can see this massive band here. This is an example of a very big this supply zone or resistance zone. So this originally would have been red. So we can see this candle was plotted at 8 o'clock on Saturday morning. When you get a massive wick, the program, the software will always plot a zone, whether, in this case, obviously a supply zone, because this is a good example, is that buyers try to push price up all the way up to what level was this? Was, around about 21,680. So buyers try to push it up, sellers knocked it down. So whenever you get a big wick like this, it means you're likely to get a zone plotted. And so remember, we call these also wicked wicks. Don't enter a trade on a big wick. And very often, as we can see, this is a good case. Most most trades will end with a huge wick, with a climax. And then this zone is plotted. So when you see a big wick, never enter a trade on a big wick. So originally this would have been red, and then we can see that price has recently just broken above it. It broke above, retested, and now price is moving up. So we can see this has been quite a nice move this evening. So right down from this counter trend signal, we can see, well, price has moved up, over 140 pips. So keep an eye on these zones. These are a huge part of the strategy. I also want to say that let's just go back to the 1 minute. We haven't got a good example in front of us, so I'm just trying to see if we got one plotted. So what will happen? You'll have to just imagine this. We haven't got a living example, but sometimes on the 1 minute, let's just say, I'll just draw in. Let me just draw in. Let's just pretend now this was a supply zone over here, okay, or resistance zone. I mean, our prices, look, it's cracking up. Now, often, if that zone was already there and there was a buy signal, should you take the trade or not? Now, what I do is we have the same that high time frames bully lower time frames. If this resistance zone, this is on the 1 minute, if that resistance zone or supply zone was also on the 3 minute, then I wouldn't take the trade, because I would wait for price to break through, give us a lightning bolt, sometimes retest and move further. But if on the high time frames there's clear space, remember space is one of our rules, then I will take those trades, because remember, high time frames bully lower time frames. So when you see a support zone or resistance zone on the 1 minute, have a look at a high time frame to see if there's a similar zone. And if it's clear on the high time frame, then there's a good chance that price is going to move up. Okay, so so number one was the big picture, looking at high time frames. Number two, looking at the support and resistance zones. And then pivots. Now, this is a massive part of our strategy, is pivots. So I'll just blow up my 1 minute screen again. And so I can't see the questions tonight. If you can keep a track of the questions. And so we've got pivots built into our strategy. So if you look at the indicator, you will see that it's a massive part. I've got shoal pivots at the moment. You can choose different widths, how many bars to the right you want to print the labels. And then you can also, if you want, change the colors. So everything is editable, but price moves massively through pivots. And so on this chart, we've got daily, weekly, monthly, quarterly. I put them all in the 1 minute. You don't have to. You can, if you want, sometimes I've put, the weekly on the 3 minute, and then I've put the monthly and the quarterly on the 8 minute as I break my screen up. But I just put them all on the 1 minute, and they're huge for support and resistance. They help us to identify where price can bounce off and move back or move up. So I always keep an eye on these pivots while I'm trading. And so what makes I prefer the pivots we use. They do put a lot on. It can add a bit of noise, but they are massive. So, for example, if you just look at price action here, look here. So price moved up and it hit the R1 daily. Tested it 1, 2, 3, 5 times. It tried to break through R1. That means resistance once daily. Then it pulled back, came up again. It broke through. We can see it hits R1 weekly, and we can see what stopped this trade is the R2 daily. 1, 2, 3, 4 wicks hit this level, and now price is reversed. So they are absolutely massive for support and resistance. And they're basically calculated on the previous day's high, low, and close. So every day they will calculate new daily pivots. So it takes the previous day's high, the previous day's low, and the previous day's close. And then what I've got is 10 calculations. Then it calculates R1, R2, R3, R4, R5, then S1 to S5. And it gives us 10 daily levels. But likewise, it also calculates once a week, our weekly levels based on the previous week's high, low, and close, and the same for monthly and quarterly. But they are massive for support and resistance. So you can see how often price will come down, retest these levels, often to the millimeter. So here we got a weekly level, price came down, look there. If we just look at this level here, we can see how price respected it there. 4 candles respected it there. This whole group couldn't break through. Price broke up to a daily level, came back to a weekly level, pivoted off. When they pivot off, they tend to move quite high. And so if you just scroll back on your screen, look at this move here. This buy signal came up to this, again, this weekly level. It pivoted off another weekly level here. So it moved between two weekly levels. So that's why I always keep an eye on these pivots. And so we like to have clear space. So in terms of space, we like to make sure that there's clear space to TP1, which is 1.5 to 1, and there's no pivot in the way. And so again, we can see here, you can just scroll back and see exactly how accurate these pivots are. Then also, what I also showed, one of my little secret sources that I like to do is that on the 3-minute chart, let me just get my screen back. Where's price action gone? So on my 8-minute chart, I have some 4-hour levels. Actually, I'll come back to that later. Let me leave that for now. So that's pivots. So they are huge for support and resistance. Then the other big one we've got, number 4, is the POC, which is the point of control. I think Martin asked the other day, what is the POC? So the POC is simply where the highest volume is being traded in the session. So it's the POC stands for point of control. It's where the highest volume is concentrated at a session, and it's huge, for support and resistance. So if we have a look over here, the POC, now the way I've done the software for this one is it's dynamic. So it does move, when price changes, this line will move. But we can see here, look at this POC. It's this yellow line. If you look in the indicator, we can see under inputs, you'll see point of control POC. Remember, you can change the color if you want and make it brighter, darker. But this is huge for trading. We can see here exactly how the POCs operated. Price broke above, tested it tested a few times. When it rejected, it went up, hit an R1, came down to the POC again, rejected that level, and then price shot up again. And so this is huge. So one of the rules we say is we never take a trade through the POC. So in other words, if we had a buy signal over here and TP1 was over there, I would never take that trade, because there's a high probability that price is going to bounce off and return. So you will hardly see, if you look at the POC and you just do some back testing, you never see price hardly ever going straight through, it's going straight through the POC. It always hangs around the POC until it gets fresh momentum. So likewise for a sell, we wouldn't, if a sell signal came now, that would break the rules, but hypothetically, if a sell signal came here and your TP1 was over here, I wouldn't take the trade, because there would be a high probability that price would bounce off. So of course, it's often positioned differently on high time frames. So we can see, let's have a look at the 8 minutes, because obviously over a high time frame, it's going to be positioned slightly differently. But if we just look at an 8-minute chart, look how, so when was this? This would have been Saturday morning. This is around about 7 o'clock. Look, price came down 1, 2, 3, 4, 5, 6, 7, 8 candles. That is an hour, because this is an 8-minute chart. So 8 is 64. For an hour, price tried to break through the POC, couldn't break through, rocketed up. And of course, this was when price opened this morning. There was a gap in the markets there. But you can see again when price began to move up again today. Look here. So this was at 5:10 this afternoon. Price couldn't break above 1, 2, 3, 4, 5, 6. It took 48 minutes to break through the POC. When it did break through, went up to the 233, came down again, retested the POC. So that is massive. So remember, tonight we're talking about support and resistance, and the POC is massive. That's why we've got it in the strategy. I want to see where it's sitting on the 1 minute. On the 1 minute, it's also different to the 3 minute, because it will plot differently on different zones. But we can see how this is going a bit further back. Look at the POC on the 3 minute. We can see here from almost 3:20 this afternoon, price tested it again, tested. It just kept testing it till eventually it broke above. So what you find most often is once price is moving above the POC, it tends to test it, and then there's a breakout upwards. Obviously, for a sell, it would be the opposite way around. We'd find price would be testing it from below, and eventually price would drop. And so it's often a good place to enter a trade. And so here's a counter trend. Now, counter trend trades, we don't advise beginners to do the counter trend trades, because they're a bit more tricky. But when price does reject a POC and there's a counter trend, that can be a good sign that price is going to move up if it's above the POC. So the POC, again, is huge for support and resistance. So often people describe it as a magnet for price. Price will always come back and test it. And so that's also where you see the POCs, where the big money is. So a lot of banks, all the big financial institutions have their money, their orders at these places. That's why price tends to hang around them before they move up again. And so again, we never take a signal through the POC. You know, if you are below, I'll always make the POC my target. So if hypothetically, you know, this buy signal's here and this POC was there, my target would be the POC, because it would be risky taking a trade beyond that. We can see there was some pullback. All right, so that's our POC. Then the next key one for support and resistance are our moving averages. And so that's also massive for support and resistance. So we have just taken a sip of water. So in our strategy, we've mainly used Fibonacci numbers, because all the big money, all the algo traders, I often say that, algo stands for algorithm. They've got algorithms for their buy and sell orders, and they use Fibonacci numbers for their orders. And so all our moving averages are based on Fibonacci numbers. And so we can see how price respects these lines. And we can see here, you see price shot up, hit this line, bounce back, and look, it hits our 55 moving average. And from there, it rejected that and bounced up. So that proved to be huge support. And so we can just, if we just look at examples, we can see, look at this. This purple line is our 1 hour trend line. That is our 987. We can see price came down, couldn't break below, and then shifted up. And so often the higher the time frame, often the more strong the support or resistance can be. We can see here too, price broke above. This is this teal line, the fib numbers, the 2584. That is our 4 hour trend line. Look, price broke above, came, and look there, 1, 2, 3 times it found support in that level and then shot up. So often when price does reject these trend lines, there's often a big move in price. They also can become targets. So I'm just scrolling back, having a look to see where we got some support and resistance. Okay, this is a bit rangy this time of the day, but we can see here how here's a good example of support and resistance. We can see, so we had a counter trend signal, price moved up, it came back, and look here, this doji, the bottom of the wick hit 2 moving averages crossing over the 55 and the 21, found support there, moved up, and look here, this is our 15-minute trend line, our trend zone here, the 233. Look, hit it once, tested it twice, bounced off, and tested it about 3 times, 4 times, and eventually broke above. And so these lines are massive for support and resistance. So especially I use that for targets. This is a very common bit of price action. When you get a reversal, price goes up, and it often goes exactly to the 55. Look here, the wick goes right to that, to the millimeter, and then bounces back and then breaks above. There's a good example. What you need to look for too, I just want to go back to Saturday morning. Let's have a look at this trade here. So this is huge. When you see this setup over here, you can see this was a great trade. This sell signal produced how many pips? Can't remember offhand. I mean, that was down, almost 100 pips. But you can see what happened. Price moved up and it hit 3. Look at this, hit 3 of our moving averages. It hit the 233, it hit the 2584 and the 987. And when these are grouped, remember I used the word when there's a grouping or a cluster, it often provides massive support. So if you look, or resistance, so here price came up, it rejected that level, came down, and it hit, that is a daily pivot. It came up and then it tried to break through. Look at that big wick. So remember, moves always end with big wicks. So buyers try to push price up. Sellers said no ways. And so whenever you see a big wick like that, it's a sign, often a good sign that price is going to reverse and go the other way. So this would have been a very safe trade to take, because look, you got a big wick, you've rejected 3 areas plus. For those who use my favorite candles, you can see we got this wonderful bearish doji bullish pattern over here. We got a bearish candle, then a doji, then a bullish pattern. That is a classic sign that you've got a reversal taking place. So again, look for clusters. So if you just do back testing, you will see how often price hits these levels and rejects them. You can see there there's a lot of resistance from the 55 when price was trying to move up. Here, price tried to move up, hit a cluster of our higher time frame moving averages. So they're huge. Also here, for example, price came down, couldn't break below our TL, our 4-hour trend line, shot up again. And so keep an eye always out for 4-hour higher time frame moving averages. They're also huge for support and resistance. All right, so that was number 6 is trend lines. So often we draw them. So it's always good to draw trend lines, but the indicator does also generate them. And trend lines, of course, are massive for support and resistance. So let's just move along to the end of our 1-minute chart. Let's see what's happening here. So here's a good example. So let's look. Here was a support trend line. That was generated there, so it hasn't been retested. It would have been generated from that low. But if you look at this resistance trend line, the program plotted it from that high to that high. Then let's look at the respect here. Price came up, and look, it couldn't really break above the trend line. It tested it. It looks like it tried one candle there, no luck, came back, tested it a few times, came up again to that level. And then when it did break through, you can see when it breaks through, there's always acceleration. So how much was that breakthrough up to that pivot? See, that was 35 pips. So generally, when price breaks a resistance trend line, it moves, and likewise for support, tested it, and now it's moving the other way. So of course, I also draw my own, but they're all very useful, for support and resistance. So especially I've showed how on our higher time frame chart over here on the 8 minutes, we can see, let's just see, are there any here we can see here? I showed this example earlier. These were trend lines we drew. These are resistance trend lines we drew on a 4-hour chart, and we've taken it back to our 8-minute. We can see again a cluster here, price rejects them and flies the other way. And so trend lines are also huge for support and for resistance. Then the next one I'll look at, we're almost through them, is Fibonacci retracement. Now this may be new for some here. So I use Fibonacci's a lot. And so already I've shown you on high time frames, the 4-hour on my 8-minute charts. You can see there will be some Fibonacci. Look at this. So this is the 302 here. Look here. This is drawn from a 4-hour chart. Look how price respected those levels. And again, this is a 236. Price came up. You can see that price was, let me just blow this up a bit. We can see how price moved between the 302 and the 236. It bounces often, it went down, up, sideways, and broke through. So these Fibonacci retracement numbers are huge. Now remember, they're simply calculated. People often, how do you come up with 236 or 302? It's simply dividing one Fibonacci number by another. For example, if you divided 233 by 987, then you would get a 0.236. If you divided 21 by 55, you get a 0.302. So they're simply Fibonacci percentages. But they are huge for support and resistance. So if I just drew one over here, from that low to the first pullback, you can see, let me just turn off a few things here because the chart is a bit busy with all of this. I'll just turn off the pivots for now. It'll just clear the chart a little bit, and let's blow it up. So I draw the Fibonacci retracement, say from a low to the first pullback, and we can see how price respects it. So price dropped down all the way to the 386 here, and it moved up, and you can see how it got some respect at the 382, and then it came right up to the minus 236. You can see a lot of respect there. When it breaks above, you can see constantly. It's just amazing. I like the mathematics of trading. How price, you can see our blow it up really big. It comes up to the 302, breaks above, doesn't get past the minus 0.5, it comes down to the 236. And generally, let's just see, almost every trade ends on a fib. So we can see this one on the minus 1236. So it's quite a big fib. You can see that was where the price ended. So very often when I'm in a trade, I will immediately draw a fib to the first pullback, and then I often use these for support lines. I can also show you, let's just look at another example from Saturday morning. So let's just go all the way back to, I was looking around about 5 o'clock. So I'm just flying back. Where were we now? So here we go. So if we look at this move here, so we had this nice 100 pip move down, price rejected, 3 of our high time frame moving averages, and then price moved up again. Now this would have been a counter trend trade, but look how you can use, if it wasn't counter trend, you go from the low to the first pullback, and look how price, if we just look at price action now, we can see how price, hit a 236. It respected the 382, hit the 0.5, spent time at the minus 618. You can see at every single level. This fascinates me. There's always price action. This is the minus 786. It hits a 1, and then basically you can see the high there was the minus 1382. Then you can also use it for the reverse. You keep it on. We can see again, price comes back. Look at that, respects the fib level, breaks through, and then that price, that culminated on the 236. We can see multiple tests going across, went up. And so it's phenomenal, That's why I say it absolutely fascinates me, the maths of trading, how Fibonacci numbers perfectly predict price action. So I draw them all the time. Then the last thing I'm going to look at is the big round numbers. So if we just go right back to where we are, so big round numbers are huge. So if you're new to trading, what we mean by big round numbers are numbers that end in zeros. So 21,700 is a big round number. 21,600 is a big round number. If you get, to 21,000, that's like a very big round number. And so this, for those of you, these are automatically generated now in the latest update. You can see, you can click big round numbers, you click that on, and then it basically gives you some options. I've just set it to 200 above, 200 below, and delete if you move 300 beyond that. So remember, for gold, you've got to take a digit off. So for the Dow, the NAS, the Nikkei, you leave it. Settings are great. If you go to gold, you need to take a 0 off each one. But you can see again how often price action respects big round numbers. So here, we'll just look back a little bit. So here we can see price. There was a price came up. Look, it couldn't get above 21,600. When it broke above, it came and retested it and moved up. But if you scroll back, you can see, look, this trade here, there was a buy signal. Okay, that one didn't reach there. This is a bit rangy in the afternoon. So let's just go back to when there was some more movement. Here's a good example. Look here, this is 21,500. Price couldn't really break below that level. So huge respect, massive support at that level. Look at this little sell signal. We can see a double bottom, couldn't break below 21,500. Huge support. We can see all those wicks. Those wicks are because there's a big round number there. And so we can see, let's have a look. We'll go back a little bit more, look at a few more. Let's just see my big round numbers. I think I haven't got them going further back than this. All right, so those are the main levels. So there are other small things like, Taz mentioned, keep an eye on the sessions. Those can be useful support and resistance too. They can be massive. And so remember, we're looking for space. Is there clear space? Is there anything in the way that will stop price moving between those 8 different levels I mentioned? I'll just summarize them, go through them all again. So the number one, well, look at the big picture on the high time frames. Go to a 4-hour chart, draw in those support and resistance lines, and also look at maybe doing a fib retracement on a 4-hour. That'll be massive. Then look at the actual support and resistance zones that are plotted. Those are the green bands or the red bands for support and resistance. They're massive. Then also the pivot lines on the screen. I've showed you those. I'll just put them back on again. So these are the pivots. Show all pivots. They are phenomenal for support and resistance. Then number 4 was the POC, point of control. That was the yellow line. Number 5 was our EMA, our moving averages. I said how important they are. There's good examples right on the page here. Massive there. They were strong for resistance. Number 6 were our trend lines. Number 7 was fib retracement. And finally, 8 was big round numbers. So those are our main levels of support and resistance. I mean, even this trade on this page, look here how price came down. Again, couldn't break through for a while, broke through, and then up again. All right, now I've got something exciting to show you. As Ty said...
All right, Dad, pause. Let's knock these questions out and then roll into that.
Okay, cool.
There's only a few. So Marcus, first up, we've got, when price is super rangy like it has been for the last few weeks, what do you use for your fib retracement points on the 4-hour on NAS?
Okay, well, I'll show you exactly. I'll show you exactly what I did for fib retracement here. So this is my 8-minute chart. I'll turn off the indicator and I will change it to a 4-hour. So it will get a bit noisy. And I'll show you exactly what I've done here. So what did I do here? So I took from there, yeah. So what I did was I looked for a high. I looked for a high and I looked for example, I either look for a low or a high. So here I originally had the fib going from that point, from that low to the first high with a pullback. But then now I've shifted it today. I've gone from that high. That high was on Tuesday, 17 June. And I take it to the first pullback where price moves back. And so that's where I've done it. Now, there are other places you probably could do it, but I think that was the best one I could work out to give me some levels. Now, remember, the way fibs work, even if you choose other points, it's amazing how you will still get lines. They may be different colors, but they'll be at similar levels. So again, I took the high from the 17th of June, 2 o'clock in the morning, to this low before the first pullback, which was Wednesday, 18th June, 10 o'clock. And that's where I've got my current fib on the 4-hour on the NAS. So does that answer that? And you can see how accurate it is. Look, I drew it from there to there. And when there was that massive drop, look, it went exactly to the millimeter down to a minus 786.
Bam.
So it's just phenomenal how accurate they are.
Epic stuff. No, you nailed that. Thank you. One from Les. This might have been further back when we were showing maybe a hypothetical example. The question is it advisable, though, to not go in when the MACD lines are so close together? So there must have been an example back at that point in time. So when the MACD lines are compressed and close together, Les, especially if they've already hopped above and they're kind of, just going horizontal, definitely not advisable at that point. The best times, whether it's on the main indicator or the MACD, is when there is separation and a great angle. Yeah. And cutting through the 0 point as well would be extra. I'm trying to look, Dad, right there to your, on that 1 minute chart to the right a little bit, if that's an example. Like there, when the MACD starts to that zone right there, that's kind of where you're not looking to necessarily enter. And as you can see, price was still trying to get through the 233, and then broke through that, hit the 987, pulled back, and you basically are entering into some range. So bang on. There must have just been an example that Dad was talking about at the point of time for that. Hope that gives you some clarity. But as you can see,
look at the high time frames. So sometimes the 1 minute may be quite compressed.
Yeah.
But it may be on a high time frame that there may be a bigger gap, and that may the high time frame may justify still entering, although it's got a bit thin.
Great stuff. Cool. And then one quick one from Danny. I don't think this is on there yet, but I said double check. Is there any alerts for the lightning bolts at the moment? I don't think so. No, and I guess as well, I'm not sure if that would be what I would call a late alert. Is that how you would say that, Dad? There's
late other entry.
Like it's an opportunity, but you'd probably prefer to have a buy signal or counter trend signal firing, getting your attention to look at a chart before the lightning bolt. Because once that lightning bolt goes, you're either waiting for a pullback or jumping in straight away if all the other conditions are met. So at that point, it might be a little bit of a late one. But otherwise, exciting times. It's time for a surprise. Dan, let's rock into the next phase.
Yeah, well, I hope we're not over-promising and under-delivering. One thing we've decided with what we're doing with TrendForce is never to over-promise and under-deliver. But I've been trying for over a year now, maybe even longer, is to try and work out in our indicator, where it's safe to put our stop loss, where it's safe to exit. I know we do have, TP 1, 2, and 3, and generally I say targets. And so I've been trying for a long time to find a way where, without adding too much noise to the charts, we could add something to the indicator that could tell us where it is safe to move our stop loss. But often it is guesswork. I've said it's more of an art than a science. You never know what the next candle is going to do, and it's all based on probability. So I was trying something on Friday, actually, Showtime. We had a family lunch somewhere or barbecue. But then I wasn't happy with it. I thought it's too inaccurate. So I was just thinking, and often what I do when I'm busy thinking of programming and coding, I actually sit on my chair on my iPad and I just experiment with different things. And then right before I went to sleep at about 9:30, it happened to me at night. I just had this brainwave. And I thought this could work. And so I emailed myself. I often do that, so I didn't forget. And then on Saturday morning, I spent Saturday morning working on it to try and find a safe way, to place our stop loss or to know when a trade is ending. So look, I want to say that this is I've only just worked it out, and I've got to work out some more rules around it. I've only just, Ty, by the way, I sent you a copy late this afternoon. Ty hasn't even loaded it yet, so it's brand new. And if it does work, I've still got to trade with it. It's so new, but it looks so good in back testing. So what I've got here, I've added another color. So here we go. So this will be version 3.1. We're probably going to bring this out if it all looks as good as it does when I get back from Oz. I'm back in, just over a week, so maybe 2 weeks. So I've added this show stop loss warning exit candle. And I believe this is going to be massive for trading. So show stop loss warning or exit candle. And so basically, it's going to plot a white candle where you should move your stop loss. And if you follow that, you're going to make a lot more pips. So if I click it on, the indicator will take a while. It's busy. Whenever you see the little eye turning, it's calculating, you're going to see some white candles appear. So hopefully they appear nicely in a second. So obviously when you're trading live, they will be there all the time. It's just taking a bit of time. So you can see some white candles have appeared. If we just go back here, we can see at the bottom of a trade, it's going to appear. So when you see a white candle, it means, move your stop loss. But this is massive. Maybe you don't understand the implications of it, but yeah, so if you took the sell, basically when you see a white candle, you can begin to move your stop loss down. There again, another white candle plots, you can move your stop loss down. And then look, this trade ran without any warning. With no white candle means stay in the trade. And you can see there you got a white candle, move your stop loss down. And if you followed that, you would have been stopped out there. Now, sometimes I go for a target, but it's huge. So if we see, okay, this was a counter trend, but if you follow this counter trend up the other way, we can see here, price is moving up. There we get a white candle. That means you can safe place for your stop loss. Another white candle, move your stop loss up. Another white candle, move your stop loss up. Another white candle, move your stop loss up. And this candle would have opened there and changed white. I mean, I would have chosen a target, but that would have been your exit point. Because if you moved it, I tend to chase the stop loss up at the bottom of the candles, but it's giving you a huge amount of information. Likewise over here, okay, this is a counter trend, but it just shows, if you did enter that trade and you took it and you got, move your stop loss down, look at that. You would have got right to the bottom and you would have hardly lost any money. And so in range, it's not as effective. We just go back to when the market is moving. Let's look at some other trades here. We can see too that, when you get a buy signal, we can see, look, here's a good example. You get a buy signal, and price is moving up, you don't have to panic about your stop loss. Okay, there you got a white candle, bring your stop loss up. If there's no white candle, wow, boom, 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 and that would have opened there, turned to white very quickly. You could have put your stop loss there. That would have saved you losing all those pips. So I believe this is going to be massive. I'm still testing it, but it seems to work on every time frame. So if here was another, look at this trade here. You can see when they plot, and you always get one other end of the move. There was the buy signal. There will obviously be pullbacks, so it won't work every time. But look, if you followed it up here and you put your stop loss there, you're going to get it right at the end of the move. And so the last candle works as an exit candle. Look at this move down here. Boom, 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 little doji white there. If you just follow this, it's amazing. You're not going to lose money with this thing. If we just look on a 3-minute, let's just go to a 3-minute chart and see what's happening. I don't know where we are here. What day was this? Was this Saturday morning? Just wait for the indicator to load. You can see here was a counter trend. So that was warning you, okay, you would have started with your stop loss there. You could have moved it down over there. And there was no need to exit the trade because there's no white candle. Oops, here we go. We plug our stop loss there. And then we move it down. If you followed that strategy, you'd only be stopped out right at the bottom of the move. So this is massive. You can see where the white candles plot, it's safe to move your stop loss. So I've still got to do some more training, even on high time frames. Let's just haven't looked at a 30-minute yet, because it's still so new. But let's just have a look at a 30-minute, you're going to see it's probably going to help us. If you want to do more swing trades, let's wait for the indicator to load. We can see here, we got a buy signal. We could move our stop loss at that point. Then we chase it up. You wouldn't have lost many pips. We can see often, I mean, when it's rangy, it won't work. But here we go. Look, white candle right at the top. It's almost like an exit candle. Here we go, a sell, and then we get at the bottom. So I believe this is going to be massive. So as I say, I've got to do some more back testing, but I'm so excited about how it's going to work. Let's just look at what it looks like tonight. So a bit in range here. But look, if you took this buy signal, you're wondering where to exit. If you plopped your stop loss there, you wouldn't have lost all that money. Likewise, yeah, look at this buy signal. We get a white candle right at the top. So no need to exit the trade until you get a white candle, boom. If you hadn't hit a target, write that. That's like your exit candle here. Look, this is looking good. So look at this trade here. If you got in here, look there, right there, put your stop loss. It's going to save us and make us a lot more money. Look at this buy signal here. You got a buy signal. No need to exit the trade. Look there, boom, 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 boom. There we put our stop loss there. And if you put it at the bottom, you could have chased that up. You would have stopped out almost right at the top of the move. So this is going to be huge, all right? So it's going to come with our next upgrade. So just when I get back from Australia, and you can see huge, like here, when was this? This was today. There was a sell signal. You would have taken your stop loss on the white candle there, and you would have basically got stopped out, but you would have not made any loss. And of course, if you didn't put your stop loss there, look, price would have stopped you out. So it's massive. This is going to be huge. So here we can see, okay, this is a counter trend, but if you put your stop loss there, moved it up, reversal, you still would have got pips. Okay, that was the open, didn't count. Let's just look at another one, gold. That's what's happening on gold here. So look, I'm just taking random examples, what opens up on my screen. Here was a counter trend, first white candle. Okay, we're on a stop loss there. No need to close the trade until right at the top, put your stop loss there, follow that one up, you would have got stopped out on that last candle. Look here, here's a sell. Look, I'm just clicked on here to see how well it's working. Sell signal. No need to close the trade, guys. Woo! Right at the bottom, there's your stop loss. I mean, you could chase it down, but no need to exit the trade until you get a white candle. Let's just see what else we got here. Now, sometimes there will be pullbacks. That's inevitable. So if the market's not trending, but again, counter trend, you could have stayed in that. You could have only moved a stop loss to the top of the white candle, moved it down there. You would have got stopped out, made lots of pips. So, I mean, this is really going to help us, guys. This is going to be massive. I'm just getting excited back testing it now. Look here. Here's the counter trend signal. Look at this. Take the counter trend. No need to exit. Okay, we put our stop loss there. No need to exit the trade. Stop loss there. Look, we've got it right at the bottom. Boom. The only thing is I can't get around this. Sometimes the dojis are hard to see. So if we entered above, when price closed above there, look all the way up. We put our stop loss there. We'd have got it at the peak. And so I believe this is going to be massive, guys. This is going to be huge. We can see here again, if you entered this trade, rejected the 55, we got triangle up, bright histogram, put our stop loss there, stay in, put it there, we get it at the top. So I think this is going to be dynamite for us. This is going to be massive. No fear of like closing trades too early. Wait for a white candle and then chase it. And then you're going to get a lot more pips. So it works on all time frames. It's going to be massive. So we can see here, look, I won't take any more time, but it's huge, it's huge. So especially on every time frame, guys, every time frame. Let's just go right to the end. What's happening on gold? Where we're going? I'm just taking a step of faith here. Okay, now we're in range, but we can see, let's just see what happened here. There was a move up. There was a buy signal. And then look there, right at the top, we get our white candle. So sometimes it won't work. When price goes straight up, I'll do some teaching. I mean, that would have been my target. If you wait with a vertical 90% trade, it's going to pull back sharply, then it's too late. So it normally works better when trades are not too vertical. But still, I think it's going to be a great help. I mean, look here. Here we go. Look at this. If you re-entered that trade, move there, boom, stop loss, and you get it at the bottom. So that's what's coming, guys. Probably 2 weeks. Ty hasn't got his yet. I'm still back testing, but I believe that's going to be massive for trading. No need to panic and close trades too early. Just wait for a white candle, move your stop loss there, and let the trade play out. All right, I think I'll
Love
leave it
it.
there.
Okay, naturally, there's some questions. So let me roll it back. I think the first one might have been Elise asking about, I thought you should only do it on a flat base, bullish or bearish. So I think this was talking about you once taught on how to trail your stop loss on flat bottoms and flat tops. And obviously, these white candles are just printing as they go, but they're not really in relation to, yeah, it's a little different. This is giving us some separate information to just, like for me, one of my strategies is if I'm entering on a 1 minute chart, I'll use the 3 minute flat bottoms or flat tops to move my stop loss to as it's moving along. That's a real safe place. But Dad, you want to comment on that at all?
Yeah, so just say the question again. I'm not sure I quite understand it.
I think it was along the lines of I thought you should only do
Yeah,
it on a flat base, bullish
was.
or bearish. Oh,
Yeah,
there
when
you
you
go.
were teaching us to move our stop loss up, you were saying only do it if it was a bullish or bearish, never do it on a doji.
Yes.
These
But
are
now
on
we've got a
doji.
new tool that can help us do it on a doji. So if we look
Okay.
at this counter trend, wow, there we can put it there. Look how safe that is. That we wouldn't have got stopped out either. So this just makes it a lot safer. So there's a doji. You could move your stop loss there. That's a flat top. That's A for away. It's now safe to put it on a doji. Sometimes I do wait though. So it doesn't mean you have to put it there. But the whole point is this enables you to stay in a trade longer. So once that starts dropping, I mean, that was a big drop. So from that candle down to that white candle, I mean, that's 44 pips. And often, price is moving quite a bit in these candles. So you think, oh, should I take the money? Should I exit? Wait for a white candle. And so the whole point is this is to encourage us to stay in the trades longer without panicking. So once you're in a break-even position, just wait for the next white candle, and then you're safe.
Very cool. Okay, so couple more follow-up questions. How far below the white candle do you put your stop loss? I'm just looking and taking it all in. It's either going to be, I suppose, the base. I mean, anyway, I'll let you explain how you would how you
Yeah,
do
well,
it.
often there are. I mean, it'll take a whole session probably to talk it through, and I've only just basically finished it. I haven't traded with it, but I've just got so excited back testing and checking it. So if the market is trending, and so let's say your zone alignment is all red, then it's pretty safe, to put it to chase the candles down and lock it in, when you get a white candle. But if it's counter trend, you're likely to get more pullback. So you could wait. Okay, there's a white candle. I'm not going to panic. I'll wait a bit, before I move it up. You don't have to follow exactly. In this case, it does work. And most of the times it actually does work. But when you're with trend, it's far safer moving it quicker. Whereas if it's a counter trend, there can be some pullbacks. I'm trying to think of an example if I can find a counter trend, more counter trend trade. So here's an example. Look, here we got a white candle. This is massive counter trend. So I mean, the zones would have been red, and now we're in a buy. There's likely to be bigger pullback. So there was the white candle there. We would have got stopped out, although that would have been the target if you were brave enough. And so if it's a counter trend trade, you are likely to have bigger pullback. So you can, be a little bit slow. But the point is, the white candles are giving us a massive amount of information about where the trade is going. And so, I mean, for example, in this trade, when was this trade? I don't know when this was. I mean, this was a huge move down here. This was, 150 pips. And so if you would, once you're in profit and you're following these down, here, I mean, there was a massive pullback, but you haven't got a white candle. So you could have actually stayed in the trade and then only closed it out when you got the white candle at the bottom. So look, I'm still testing, but it's huge. Look at that sell. You would have hardly lost anything by following that pattern on this trade.
Very cool. Okay, another one. I think this is the easy one. At what stage does the stop loss candle appear? Like after 3 greens? I mean, I'm pretty sure it's got nothing to do with that.
No, it's going to be different on every trade.
There's a lot behind it, but it's not. Yeah, you'll never be able to say it's after 3 greens or 2 greens or anything or reds. It's based on what's happening during that candle, pretty much. It's
basically based. I mean, I'm not giving away my formula, but it's basically looking at the momentum of the trade. It's looking at the momentum. There's a calculation that's looking at the momentum and the potential of pullbacks and things like that. But it's, I mean, it's got nothing to do with the number of candles.
Yeah. No,
Sorry.
that's
It's another
easy.
calculation
Can you
I've
hear
got
me?
there.
Yeah.
Sorry, what I mean is, does it turn white live? So as you're on that candle, does it turn white? And that's where you go, okay, cool, I can move my stop
Absolutely,
loss
yes.
down now.
Mm.
Got you.
It
Cool.
goes
Thank you.
white on the candle. So
Bam.
it's while that candle is plotting, it's going to change to white.
Got
In
you.
that
Cool.
sense,
Thank you.
would it unprint? All good, Nicole. Would that unprint, Dad, or like during that 3 minute? Oh, sorry. Say you're looking at a 1 minute candle. During that 1 minute candle, could it flash white and then unflash white during the same minute?
It could, but I would say with the way I've done the calculation, it's highly unlikely.
Cool. Easy. Love
On high
that.
time frames, it could happen more on
Yeah.
a high time frame, not on a 1 minute.
Yeah. No, that's cool. I get that. Another one. How would it appear, or would it function the same way on normal candles versus Heikin-Ashi? I know all your programming leans towards Heikin-Ashi.
I mean, it work. I've changed to normal candles, and it works the same. It'll look a bit different. So if we go back to that 5 o'clock, let's go back to that 5 o'clock Saturday move. Where we go? Let's go back. Where are we? So let's just find that. We're getting close. You can see it may plot on different candles, but it still gives you the same information. So it won't be on flat tops. So we can see there we got a white candle, move your stop loss down, move your stop loss down, move your stop loss down. I mean, everything does work better on Heikin-Ashi candles, way better. That's why I like them. So for example, I think with Heikin-Ashi candles, I think we got a white candle. Well, that's the problem. You can't, we got a doji here. You got to expand your screen. That was there is a white candle there, but it's in a doji, so it's not always visible. So it works exactly the same, but I think it's always better with Heikin-Ashi. It's much smoother.
Great stuff. Okay, last funny one.
Well, look here, look here, it worked fine here. This sell here, boom, and
Yeah.
we basically got a warning at the bottom there to move our stop loss, so we would have got those pips.
I can tell you now, guys, this is going to save you from giving back pips like nothing else will.
Totally.
Like, I think there was a Pirates of the Caribbean line, take what you can in this context and give nothing back. And with trading, there's nothing worse than watching your trade run in favor and then loop all the way back down to break even or a stop loss in terms of a loss. But in this case, if you can chase and you can lock in gains and exit at a healthy, if you haven't obviously exited from a target, this is the next best thing to be able to trail. Because for me, I love to stay in it as long as possible. But if these show up, this is going to be a great way to exit with pips and not break even. So
Yeah.
I think that was that. The next obvious question is when you get back from Oz.
10 days.
There we go.
Ty's got to try too, though. So Ty hasn't even
Yeah,
downloaded
so
it.
I've obviously been building a website for the last month. So I'm about to whip back into trading mode and give this a go. So there's that. And then I think there's one more question from Tim. Can you use a white candle as an re-entry point then if it's a halfway down a trend?
Yeah, I've been looking at that, and I've just been looking at that. And so if we go back to this trade, I've noticed that when a white candle plots, afterwards, price does tend to move. So if we have a look, obviously there is risk involved because you got to work out, there's things like divergence to look at.
And if you're too far away from a trend zone, things like that.
Yeah. So all the normal rules, but I've noticed that most often when a candle plots, there's often a nice move afterwards. When it plots, there's a move. From this white candle, there was still another 30 pips down to the bottom there. And so you can see after a white candle, there's often a move. It wasn't intended to do that, but I've noticed that it does happen.
If it's followed by a flat top or flat bottom, you probably got a way higher chance then.
Yeah, there's a flat bottom, price moved. There's a flat bottom, price moved.
Lots of fun things for us to test, guys. We've got some time, but as you can tell, the scientist, or should I say the mathematician, is never hanging up his coding. He is constantly looking to improve and make this the most powerful indicator on the planet, hands down. But yeah, guys, that's we're on 9 o'clock, so I'm sure you're now all fizzing to want this. We want to get it to you as fast as we can. I just need to play with it for a little while, and then we'll update everybody closer to the time. But Dad, once again, thank you so much. That was absolute gold. Support and resistance wrapped up. So hopefully, guys, you got all of that. Feel free to rewatch it once it's on YouTube. In the meantime, Dad being away this Friday. If all goes to plan, I'll be running live analysis this Friday morning. And then next week is school holidays, so we usually take a 1-week break in the holidays. But I've also been working on some pre-recording, so odds are there'll still be some content for you guys actually next week anyway. But we probably won't be live on Tuesday night because Dad's away, and then we're away, and then we'll get back after that. But we're also locking in a live event very, very soon, mid to end of July. Potentially the 20th. Don't hold us to that. We've got a few more boxes to tick, but aiming hopefully for the 20th of July in Auckland, which would be super fun. Otherwise, guys, we will wrap it up there.
Thanks for joining us.
Thanks so much for being with us tonight.
Thanks for the holiday wishes. I need a good break, so
yeah, there you go. Man, stacked out live tonight. So good to have so many of you on with us. Guys, aside from that, thank you. I just want to say a huge thank you. Obviously, we launched things last week with our website. It's so cool to see people clicking in there, opting in, jumping in there, taking advantage of the free course. Obviously, if you're in here on the inside, you've already worked through most of those videos. But feel free to share it around. If you know anyone that's thinking about getting into this stuff, just simply shoot them a link to trendforce.co. They can put in the name and the email address, and they'll instantly get sent that PDF and those videos so they can just start learning. And I can tell you now, besides wars and things like that, and the 18.6 year cycle, it is an incredible time to be learning these skills, to be able to make money whether things go up or down, no matter what happens. So much love and appreciation for all of you supporting us through this journey. We are building this together. Your feedback is helping us every step of the way. So with that, guys, we'll wrap it up there. Enjoy the rest of your evening. Trade safe, and we'll see you on the inside. All right, good night, everyone.